Hi everyone. This week we're going to talk a little bit more about what's going on with investor sentiment. Right now things are holding pretty stable at a macro level. They're on par with the peak of the last cycle, and that signals steady momentum for commercial real estate, particularly sales. This week I'm going to focus in on the apartment segment and what investors are seeing there. So overall, apartment investor sentiment is pretty stable. It really hasn't moved a lot over the last couple of years, and it's still leaning slightly to the buy side. 32% of investors plan to buy, 46% are holding, and 22% are selling this year. Now, according to the survey, investors expect property values to increase by about 2.2%. And that's a little bit more cautious than what we're expecting just based on rent growth and performance measurements alone. We expect it to slightly outpace that level as long as cap rates remain flat. But investors are a little bit more cautious today than they were a few years ago, but they are still very active. So what's supporting housing demand? Low unemployment has been critical. Unemployment rate's currently at about 3.8%, and this has unlocked accelerated household formation. We expect 1.5 million new households in 2019, and that's well above the average of 1.1 million per year. This is driving apartment absorption. Now, Class A space faces some challenges, most notably the new construction levels. We're hitting a cycle high 315,000 new units this year, which will predominantly be Class A space. And although absorption is likely to remain positive for Class A properties, the vacancies will drift up in this segment to about 5.8%. Class C apartment vacancy rates still remain at an 18-year low, 3.9%. So that's very tight, and this is a factor that's driving our sales activity and our pricing. Now, why are investors selling or buying? Of course, they're moving capital, and diversification strategies is a key ingredient as they look at alternative markets to drive yield or reduce risk related to local economies or to natural disasters and that type of thing. They're also looking at their tax strategies a little bit more, and they're also looking at opportunistic strategies, looking for markets where they can get in there and create value. Cash flow, yields, limited appreciation potential in many of the markets are really causing investors to spread the nets a little wider and seek out new opportunities. Next week, we're going to continue with our investor sentiment survey results and focus in on office and industrial properties.